will study economics for UPSC Prelims and Mains. I will be making a full series and I will be covering high yield topics in greater detail and low yield topics in less detail so you can get better benefit in both UPSC Prelims and Mains. Our first topic will be money, and it's a pretty big topic, so we will be making couple of videos on this topic, and I will title them as 1.11, 1.2 and so on, so that you can easily categorize it. And let's get started. Our first subtopic is bank money, deposit money, paper orders and digital orders. Paper orders are written instructions from one party to another party to pay money. First we have check. Now there are three parties in a check. Drawer is the sender who sends money, drawee is the bank, and payee is the receiver, the person who gets the money. There are a couple of types of checks. First we have open bearer check, and there is no crossing. No crossing means that anyone can encash the check. When there is opposite is when there is a crossing on the check on top left, two parallel lines, it means the funds can only be transferred to a bank account and you can't take cash in exchange of the check. Okay, so we have post dated check, deposit after a specific date. So you have to deposit post dated check after a specific date, only then you will get the money. Stale check, so if not deposited within 3 months, the check will become stale. Okay, second paper order we have is demand draft. DD is a prepaid instrument, and drawer is the applicant, the person who is giving the money to the bank, and bank issues DD and guarantees payment to the payee. So let's say, for example, you have to submit college fees. You will go to the bank, you will make a demand draft in name of the college, and then you will take the DD, give it to college. Your college will submit it back to the bank, and the bank will pay college money. So what are the benefits? It's safer than cash. If you have to travel 10, let's say 10-20 kilometers, you can visit your nearby branch, make a DD there, then travel with the DD instead of traveling with the cash. Okay, so second we have overdraft. When a person has insufficient balance, the bank allows him to withdraw money up to a certain limit. So it's a short-term facility for operational needs. PM Jandhan account offers overdraft facility up to 10,000 with conditions. So what are the differences? Overdraft, what's the difference between overdraft and loans? Overdraft is short term, loans are long term. Here we have some important codes in check. IFSC is 11 digit alphanumeric IFSC is 11 alphanumeric characters to identify a bank branch. Okay, and the full form is Indian Financial System Code. Second we have MICR code. It's 9 digits printed in magnetic ink, iron oxide, for automated clearance of checks. Full form is magnetic ink character recognition. Okay, so moving on, we have NPCI's check truncation system and positive pay mechanism. So what's CTS? In CTS, physical check is not sent. Instead, a scanned image is sent electronically for faster clearance. Okay, so for example, SBI is depository bank. They scan the check, then they send the scanned image electronically to the other bank, and then the other bank pays. What's the benefit of CTS? Faster clearance. Okay, few hours instead of couple of days. Now what is positive pay mechanism? drawer, drawer sender's bank sends checks detailed image to the other bank for verification. The other bank verifies. If there is a match, they will pay money. If mismatch, then they will reject it. Benefits: protect senders from fraud and manipulation. You can't just add a zero, and get it encashed. Okay, so there were some reforms in CTS. CTS clearance settlement. So clearance of checks took a couple of working days earlier. Why? Because bankers used to send checks in bulk. It was called T+1 settlement cycle. After reforms, settlement within few hours. It's called settlement on realization. Okay. So there is one more reform, but RBI postponed it. It's CTS 3-hour settlement. From 26 January, RBI wanted bankers to clear the checks within 3 hours. Project was called Phase 2 of Continuous Clearing and Settlement on Realization. But bankers were still facing operational challenges, so RBI postponed it. Okay. So this is the first subtopic, bank money and deposit money. Moving on, our second subtopic in money chapter will be electronic orders and digital orders. First we have CBS, core banking solution. UPSC has asked this earlier in their previous year prelims. So what is CBS? Integrated banking software. So it's a software that connects all the branches on a real-time basis and enables customers to access their accounts from any branch. And centralized data management and branchless banking. Okay, examples are Finacle, BANCS, eCuber used by RBI. Second, now there are some payment settlement systems like RTGS, NEFT, IMPS. You must have received some money using one of these systems. We will compare the features and all details. Okay, so RTGS full form is real-time gross settlement, done for high-value urgent transfers. NEFT is National Electronic Funds Transfer, scheduled batch-based transfer. IMPS is immediate payment service, instant on the go. Okay, full form already covered. Transaction limit in RTGS is 2 lakh to 2000 crores. In NEFT limit is 1 rupee to 25 lakhs. In IMPS limit is 1 rupee to 5 lakh rupees. We already covered that RTGS is real time instant, and this is NEFT is batch wise settlement at 30-minute intervals, and IMPS is also real time. Availability 24/7 including holidays for all three. Okay, use base, large value transfer. RTGS is used for large value transfers, business payments, forex transactions, NEFT used by retail and regular payments, salary, rent, EMI, bill payments. IMPS is used for instant transfer, like merchant payments, mobile based payments. When you pay to like you go to a mall, you purchase something, you pay to them, okay, instantly. Now fee, RTGS inward fee of 0 rupee. If you're receiving money, you don't have to pay anything in RTGS. Outward, RBI has allowed outward up to 50 rupees in RTGS, but 50 plus GST. But most banks charge 0, yani they don't charge anything for RTGS. Maybe because they want to retain their clientele. Because if somebody is parking 2000 crore 10,000 crore in your bank, why would you charge them $50? You want them to stay with your bank. NEFT, RBI has waived charges, now it's zero. IMPS, zero to nominal, most banks charge zero. Who can provide RTGS? Banks and authorized prepaid institutions, member of CP, member of CPS system. Now, banks, who can use NEFT? Banks and authorized payment institutions. Who can use IMPS? Banks, NBFCs, NBFCs, payment apps, Phone Pay, Google Pay, Paytm, these. RTH speed, already covered, that is it's instant, seconds. NEFT 30-minute batches, and IMPS is also instant, seconds. Moving on, RBI has introduced LPSS, Lightweight Payment and Settlement System. It's RBI's emergency backup payment system for situations like natural disasters, cyber attacks, or war. It's portable, easy to deploy, and can be operated with minimal infrastructure. Ensures continuity of digital payments even when other systems are disrupted. Okay. Next, we have beneficiary account name lookup facility, available for NEFT and RTGS. Earlier, it was available for UPI apps. So what happens is, sender can view the beneficiary's name before confirming the transfer, by entering account number and IFSC. It helps reduce errors and frauds in fund transfer. Okay. So some recent reforms: beneficiary account name lookup. Second, 24/7 availability of RTGS and NEFT. Earlier, RTGS was not available 24/7. It was only available on working time, like 9 to 5, from Monday to Friday or Monday to Saturday, whatever hours the bank is working. Now it's available 24/7. Fee was waived on NEFT. Earlier, there was some fee on NEFT. And NPCI continues to upgrade a UPI with new features, like UPI Lite, delegated payments, offline payments. Here we have MCQ for your practice. UPSC asked about core banking solutions in 2016. Read this and try to solve it using the topic I have taught you. And the second MCQ is about RTGS and NEFT. They asked just last year in 25 prelims. So read this and try to solve it. Okay. Next, we will study about NPCI, National Payment Corporation of India. What is NPCI? It is umbrella organization for operating retail payments and settlement systems in India. It was incorporated in 2008 as not-for-profit company under the Companies Act, promoted by a group of major banks with RBI's guidance. So there were like 10 banks and they started this with 100 crore capital. Initially promoted by banks, but later non-bank entities like Paytm, Phone Pay, Amazon Pay also became shareholders. Objectives: to build and operate retail payment system efficiently, to provide technology-driven, innovative, cost-effective payment solutions. Okay, so when we talk about cost-effective, earlier we used to have only Visa, MasterCard, and these companies used to charge high amounts. But NPCI introduced RuPay for domestic cards, and the fee was significantly less than Visa and MasterCard. Key role: acts as an operator of various payment systems and digital platforms, works as trusted technology backbone connecting banks, customers, and merchants. Key initiatives of NPCI are UPI, IMPS, RUPE, AEPS, BBPS, and ACH. We will study about all these topics in uh, upcoming videos in greater detail. Okay. MCQ. Consider the following statements. In India, RTGS and NEFT payment settlement systems are owned and operated by NPCI. So this statement is wrong. RTGS and NEFT operated by RBI, not NPCI. NPCI is an entity promoted by banks. This is correct. Okay, so NPCI introduced UPI. All of you know about UPI already. It's a real-time payment system developed by NPCI on the IMPS infrastructure. Enables instant money transfer between bank accounts using mobile application. Key features: bank to bank transfer using virtual ID, like your Paytm ID or PhonePe ID. No need to share bank details, you just have to give them UPI ID and they will transfer you money. Works 24/7 every day, including weekends, holidays, every time. Supports features like QR code payments, bill payments, request money, autopay. Okay, so what are post transactions and what are pull transactions? In post transaction, you send money on your own discretion, like sending money to your family. In pull transaction, you give permission once and the payer pulls money as per mandate. If you are giving permission to pull monthly amount, they will auto debit monthly amount. You give permission to debit yearly amount, they will auto debit yearly amount. That's pull transaction. Okay, next, delegated payments. This feature was introduced by UPI, sorry, by NPCI. Primary users can create secondary account for family members in UPI, and they can use money from the primary account within set limits. Like, let's say your father has UPI account and they can set up you as a secondary account, and you can use money from his account up to the set limit. Okay, so what are the transaction limits in normal UPI? 1 lakh daily is for normal transactions, 2 lakh a day for capital markets, like mutual funds, credit card payments, loan repayments, EMI, insurance, premium, fee payments. This is 2 lakh per day. And 5 lakh per day purchase of GSEC under retail direct scheme, and IPO subscriptions, medical and educational fees, tax payment to government. This is 5 lakh limit. Okay, moving on. Next we have UPI Lite on device wallet. Users add money from bank account to UPI Lite wallet in the app. You don't need to enter any PIN for payments up to the limit. Faster and smoother experience. Works even if the sender's bank server is temporarily down. Okay. One more thing we have is UPI Lite X. So what's the difference? UPI Lite requires internet. UPI Lite X doesn't. It works offline using NFC technology, that is near field communication technology. Okay. Works when app can connect to bank servers using internet. UPI Lite X works even when the internet is not available, but you have to go online after a couple of days in UPI Lite X to sync data. Okay, so here we are done with the first video in the chapter money, and I will be making a couple of videos in the chapter money to cover it fully, and after that I will make a lot more videos on the economics in economics on UPSC prelims, mains, and I will be covering higher yield topics in greater details. I have analyzed previous year questions, and for the last 15-20 years there's a pattern. Uh, there's a pattern on the topics that UPSC has been asking repeatedly, or UPSC has been asking more times than the other topics. So you should put your time revising those topics many times so that you can solve every question when asked. I will be sharing these notes also, the PDF, so you can use it to revise. uh, I can upload it on the drive, or I can upload it on my Telegram channel. You can go there and download it from there. So okay, I'll meet you in the next video. Make sure to subscribe, like this video and subscribe the channel, and share this video and comment and press the bell icon so you can be updated when I upload my next video. Thank you.